Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. Happy Tuesday. Well, today was a great day. Best day of the year so far for me. I'm up around 18.3K, I think, 18K, with one trade. Think about that. One trade. Yesterday, I took 3 losses on live with you guys. 3. And I was down 2,500. Today I took 1 win, and it was an 18K win. In tonight's session, I want to talk to you guys. Number one, how is that? How do I position myself constantly to be able to have such big winners, such small losers? What's my mindset for it? How did I expect to see good action going into the day? How did I tell you guys yesterday that we were going to get this setup today in last night's charting session of how we expected to see good, efficient setups? And like I said in last night's session as well, as I said, I expected to see an A+ setup going into the rest of the week before those lows were taken. So we're going to go over the trade that I took today, the confidence I had with it. Why did I have that confidence? What was I looking for to enter? Why I entered where I did, where I scaled in. Why I traded my full contract size, and yeah. So, first thing I want to talk about is going into the day. Why was I so confident in my bias? Well, I was very bearish going into the day. And the reason I was bearish going into the day is because we can recognize where we were on the charts. We recognize where we are in relationship to the model, right? Zooming out to the daily, we recognize we had the daily volume imbalance. And when we start to zoom in, on the left side of the chart is when we can see what's going on, right? What are we doing here, right? This isn't just an expansion move to the upside. There's something more here that people don't recognize. But I want you guys to constantly be looking for this, right? So number one, and as well, is, like I always say, my mindset when I'm trading and when I am looking at the market and I'm trying to understand something, I'm thinking of 4 things. Which one of these things are we doing? Are we hunting liquidity? Are we rebalancing the inefficiencies? Are we rebalancing the equilibrium? Or are we generating liquidity? On this side to the left here, we're doing multiple things here. Not only, we start here by generating sell-side liquidity. How do we know this is generated sell-side? Because it's stacked relative equal lows. Stacked relative equal lows. What are we also doing here? We're rebalancing to the inefficiency on the bigger time frame, this previous inefficiency. And we're hunting liquidity to finish this original buy model. We had sell side of the curve. We then had buy side of the curve to then hunt this previous buy side level. Once we continue to have this expansion, we know we still have these relative equal lows down here. And this is going to act as some form of sell side. So when we're in an expansion phase, a lot of the times we might get some internal trades, but not really anything high quality, because once this high is taken, the model has been complete, right? This model has been complete. So now our goal is to recognize what the bigger time frame model is and try to align an intraday setup with that, right? Because again, when can we expect to see efficient price action? When can we expect to see A+ setups? When we have a confident bigger time frame bias. Right? When I have a confident bigger time frame bias, I know where the market wants to go. So I zoom in and I recognize the internal model that aligns with that external bias. And that is how we can get efficient price action in A+ quality setups, right? So on this move to the left, we're continuing to move up. Again, what are we doing here? We're generating sell-side liquidity. And this now becomes our sell side of the curve, right? Now, what also are we doing on this way to the upside? We're loosening and broadening this previous price leg. So now, when I draw in this whole price leg here, these lows fall back to OTE of the range. Where is OTE? Why is OTE important? OTE is where we expect market to go, at least equilibrium, and OTE is where we expect to rebalance price to most likely, right? Especially if there's some form of liquidity, and there's a reason for price to go there. Now, on Monday, we set us up for the week. Going into this week, I said I want to see the daily fair value gap become the drawn liquidity. I want to see the daily volume imbalance become the draw on liquidity. Right now, earlier in the week, on Monday, that was not the case. This doesn't show me any sort of desire to go here. I'm not predicting it. I'm simply watching price and recognizing that, hey, we are generating all this sell side here. If we can start to see the first thing we need, which is the internal model here, to then align with this model, this could now spark sell side of the curve. So what ends up happening is we then have that internal model, that exactly what we were looking for. Zooming in, we have accumulation. Before having our manipulation leg higher, before having displacement to the downside. So what are the two things that we're doing here? Fractal price, right? I want you guys to focus on fractal price. This is a model in its own. And you can trade possibly shorts here, targeting this sell side level, because this is a model in its own. But on the bigger time frame, when you zoom out, what am I knowing? What am I thinking this is now going to become? Right? Because this is not just an internal model. This is now sparking the sell model, because this now validates the manipulation move, because it's an AMD, power of 3. We've had exactly what I was looking for. Accumulation, manipulation leg higher. This is the most important thing, though, the displacement. We get displacement through the swing low to spark the sell model. And notice, it's not just a little poke below. It is selling off back inside this range, right? So from here, this is when I said going into this week, I am very, very confident that we will sell. And I said that on Monday. I said, I have seen this happen over and over and over again, and I'm telling you, we will get a good trade. We will have the opportunity, because I am very confident this is what's going to happen. I have seen it over and over and over again, and I say it constantly to your face to show you the conviction I have in the market. When we get this move, now, what am I looking for? What am I focusing on? Well, okay, where do I recognize where price wants to go? Number one, there's a couple things I can do here. I'm going to draw in standard deviation. I know 2 to 2.5 we want to go here, possibly the 4, right? 4 ends up aligning perfectly with those relative equal lows there. So now my job, going into today when we talked about last night, I said, depending on what happens in the overnight session, is going to give us a good understanding of what we need to do in the AM. Because in the AM, if we end up dumping in the overnight session, the AM is not going to continue us lower. We will build more structure. We will rebalance on whatever the internal model is. And then we will continue lower towards whatever the external draw is, because we're in the bigger time frame sell model. Now, if we were to rebalance in the overnight session higher, then I'm looking for manipulation early here to then see a sell-off near the open. Going into the morning this morning, we had a 300-point or 300-tick move to the downside. 300 ticks here. What do I expect to see? One of two things: consolidation or price rebalancing. Because again, what are we doing? We're constantly doing one of four things. We are generating sell-side liquidity. We will rebalance the inefficiencies, rebalancing to the inefficiency. We are rebalancing the equilibrium. We are rebalancing to equilibrium of the previous price range. And we're hunting liquidity. So what did I need to see going into the day for me to say, when is the right time? Because I know the market's going here. I know the market's going here, right? And you can see we actually took it and then just immediately rebalanced, as well as also after hitting our standard deviation. Again, you talk about fucking precision. Talk about fucking precision here with standard deviation here. Talk about it. But how did I know? What was I looking for? Exactly what I needed to see. Because all morning, I did not take a trade here. I know a lot of you guys took some longs. There's a little bit, maybe some long setups here, but this I was not interested in because I knew exactly what I needed to see. This goes against my bias going into the day. If it goes against my bias going into the day, I know it's going to be less efficient. It's going to be less quality. It might work out, and that's fine. It's not a bad trade, but I know what I'm looking for, and what I'm looking for is all I need. So what do I need to see happen first for me to take a trade, right? Because I know market wants to go here, but we're looking and we're recognizing for when time and price is going to align, right? When is time and price going to align? So the first thing I need to see is we just fucking sold off massively in the overnight session. I am patient going into the morning because I'm expecting either us to chop or us to rebalance. So going into the morning, I am looking for price to then rebalance, right? Rebalance back to equilibrium, back to OTE of this previous price leg, because we just dumped, right? We dumped. This shows us we're not yet ready to go lower. There's no reason for price to go lower. Price needs to rebalance to then go lower. So why should I be looking to take any sort of short here targeting lower when on the bigger time frame, we haven't gotten to a position in which I expect to see efficient action, right? So we come up to OTE. At this point in time, we are now at the first step of what I want to do. The market is now rebalanced. We're back in OTE. Again, I'm still expecting the market to go lower, but now my goal is to recognize the internal model, right? So I have the external model already aligned. I know we want lower. I'm looking at these relative equal lows. This is where I want to see happen. Price has now rebalanced back to OTE. And like I said, going into the morning, we will not go to this high before this low is taken. This high is protected. We will not go here. Notice where we respected today, where we tapped. To the tick, might I add. What is this? Well, if you zoom out here, this becomes, didn't mean to do that. This becomes the 4-hour propulsion. 4-hour propulsion block. When we're expecting price to rebalance, there's multiple things in which we're looking for. We're looking for, okay, what was the previous price leg? Previous price leg was this. When we zoom out, is there any sort of confluence that aligns with that area in which we want to see reject? This is what I'm looking for here. This wick. Why is it? Because this is a form of sell side that has already been taken. And this wick now becomes the propulsion block, which we then tap back into. From here, I'm still not taking a short. Could you have maybe taken a short up there? Yeah. Am I looking for that? No, because I'm waiting for exactly what the internal model is telling me. Because that is how I time the market. When time and price aligns and I'm looking for exactly what I'm looking for, it will work out. And today was a perfect example as to how precise it can be. I saw so many people in the chat today take this short that did not have confluence in it and say, Justin, a lot of you guys were fucking shaking in your goddamn boots and didn't have any sort of patience whatsoever. We are focused on building conviction and building confidence. When I align this model, what is the next thing I'm looking for? Some form of manipulation. What does that look like, right? Because it's going to look like a couple different things. Number one, could be power of 3. We could have accumulated here, had another move higher, and then had displacement. Or we could have had another SMT like this, like we did. So I'm waiting. Like I said, we're still not ready. We're still not ready. When I was on live with you guys, now we have an SMT here. This is now the next thing in which I'm looking for. We are at a point in time in the market in which I expect to see manipulation. That is the biggest thing. Listen to that again. We are at a point in time which I already expect to see manipulation. Why do I expect to see a manipulation move here? Because we are now back to OTE of the range, and the drawn liquidity is still lower. So there's no reason for us to go higher here. When there's no reason for us to go higher, what sparks the move lower? Manipulation. We recognize manipulation by seeing the SMT. What's the next thing I'm looking for? Displacement. Right here. We get displacement through the low. And now everything that I've needed to see has checked off. Now I'm looking to take an entry. Where am I looking to take an entry? Well, first, I was looking to take an entry in this fair value gap. But then I realized we did not need to go to this fair value gap. And if I waited for this fair value gap, I would miss the setup. How did I know that? How many of you guys put a limit order here and ended up and missed your entry? Yes, me, I did. Let's talk about why I entered where I did. Now, if you guys haven't, or actually, I don't know why, actually, I guess it's the day's over. So let me show you actually the executions first. These are my executions today. Top ticking. position add, scale, external low. Why did I enter here? Let's zoom in. Now, this is, I like to call the DJ signature. The DJ signature, because DJ, honestly, full credits to DJ, kind of put me on to recognizing this more, which is something we call SMT fair value gap. An SMT fair value gap is when one of the correlating indices, ES in this case, rebalances price, but NQ does not. This forms an SMT. It is a divergence. When I look over at where ES was at this time, ES has now tapped this fair value gap. The same time, NQ has not. At this point in time, there is no need for NQ to tap this imbalance. Now, another reason why I entered here is when you zoom out to the 15-minute, this fair value gap already opened up. So I was no longer focused on the 5-minute. I was now focused on the 15-minute. This is now the imbalance I'm looking for. 15-minute fair value gap aligning perfectly with the breaker. This is now the unicorn setup. Breaker, fair value gap. We have this massive breaker here. We have a 15-minute fair value gap. I'm waiting for my entry. I'm waiting. Boom. Snipe. Why do I snipe? ES taps the 5-minute. NQ does not. I recognize now this is an SMT fair value gap. We have now touched into the breaker. I've seen exactly what I needed to see. Exactly what I needed to see. Market maker sell model on the bigger time frame. Price needs to go lower. Dumping 100, 300 points in the morning. What am I looking for? Price has now rebalanced to OTE of the range. Do I expect to go higher? No. Why? Because we're in a bigger time frame market maker sell model. What is my goal here? Recognize the internal market maker sell model in the market maker sell model. Why is that? Because that is when price and time will align and you will get the most efficient action. What am I recognizing now that we're in OTE? Manipulation. We get an SMT. What's the next thing I'm looking for? Displacement through a specific low. This is nothing. We do not get displacement here. This is displacement of the downside, but not through a swing low. This is displacement through a swing low. We have these lows here that have been generated. We zoom out, recognize the breaker, pull back to the fair value gap. I enter in right here. My original stop was at 5.6, and I was in 6 contracts here. I was in 6 contracts, and I was waiting to add my full position. Why is that? This is how I pyramided today. I traded my full size, 10 contracts. Sometimes my full size is 12, but I traded 10 contracts on this trade. Where did I add? And what was my goal for this? Right here. Once we get this displacement, again, through the swing low, this shows me price no longer wants to go higher. This SMT holds. I then wait for the pullback to whatever the recent imbalance is. Right here. Taps it perfectly. And I enter the rest of my position size. And I move my stop to the recent high. What does my risk become now? I am now in 10 contracts. How much am I risking here? Actually, less than this because my fill now is half this. I add half the position size. My fill now becomes to probably around here, I would say. Maybe higher, maybe lower, but around there. My stop then moves to this high. And what is my risk here? Oh, I got to log. It won't let me because I'm not logged in. Never mind. Wait, why am I not logged? I'm not going to log in because I'm going to leak my account information, but my risk here is about 1,000 or around 2,000. My risk here is around 2,000 now. So I am now in 10 contracts, risking $1,000 to $2,000 after waiting, entering my regular position here. Once I get the more confirmation, I enter in the rest. And again, one thing I want you guys to keep in mind, I am not doing this every trade. This is the first time that I've pyramided into an entry in a long time. Why is that? Because this was an A+ setup. It's exactly what I knew. Exactly what I expected going into the day. Exactly what I expected going into the week like we talked about on Monday. I told you guys exactly what was going to happen. How many times has that fucking happened? Seems like it's almost every fucking day it's the same thing. My goal isn't just to tell you, oh, hey, I predicted the market. Oh, I did this. I am shoving it in your face so many times that you can do nothing but fucking admit it. You can't deny it. You can't deny the precision. You can't deny the fucking consistency. Because it's right in your face every single fucking day. These concepts work. The hard work you put in to recognize them, understanding why these concepts work. When you start thinking of the market in terms of these things, you have an unbeatable fucking edge. We sell off. My first scale was this low. Scaled the most off down here. Let the rest of my contracts go and took off at this low and then immediately reversed. Top and bottom ticked. Is that a coincidence? Fuck no. It's not a fucking coincidence. Because it's exactly what the market needed to do. Why did the market need to do that? Because we're finishing a model. We're hunting liquidity. What are we doing constantly? We're hunting liquidity. We're generating liquidity. And guess what we're doing here? What do you think we're doing here on this way down? We're generating then buy side liquidity for this now to eventually get ran. Which we're starting to do now. Now that the objective has been taken. This is an A+ setup. This is exactly what we want to see. This is the time in which money is made. But only when you have conviction with it. That is the biggest thing. Doesn't matter if it's an A+ setup. If you don't have the confidence and you haven't seen it happen over and over and over and over and over again, you won't have the confidence to, number one, hold it, let alone enter it, let alone enter it with full size. So I hope today, and one extra thing I want to say too, this won't happen all the time. If you go into the market expecting this exact same thing every day, you're going to fucking lose. I lost $2,500 yesterday, which was my biggest loss this month. $2,500. I made $18K from one trade today. $2,500 I lost. I took 3 L's yesterday. Again, mistake was made, recognized it. $2,500, 3 losses. 1 win, 18K. Why is that? Because I am not focused on making money. I am not focused on making money. What am I focused on? Recognizing conditions. Recognizing probability. Where are we in the market? Recognizing the model. Is market showing me exactly what I expect it to show me? And if it's not, I'm not taking a fucking trade. That is how you have consistency. You have to have the discipline to only wait for exactly what you're fucking looking for. And you will be rewarded for it. So, any questions? Any questions on today, on the setup, on my executions in general, anything? And one last thing before I start answering questions. I want to scroll up because I sent a message today in the Discord that I think is very, very, very important. And let me go find it. This is it right here. This was during the trade, 11:37. $11:37 my time, so that was around here. This is when everybody in the Discord was freaking out. I said, if you're scared, then exit. You need to learn. Let's say we sell, and then you hate yourself for breaking the rule and not trusting yourself. You exit now because you're scared. We pump. You would have gotten stopped out, and then you're happy and end up creating a bad habit that continues to hold you back in your trading. Your choice. Breaking your rules, no matter the outcome, will always cause negative impact. Always. And will always spark more negative impact. If you go into a trade like this that you do not have conviction in, and yet you're still taking it with full size, you automatically will be feeling more emotion, more anxiety. You're way too risked on. You're afraid to lose whatever you put on the table. And you get to a point in which you want to exit the position. You realize I've made a mistake or whatever it is. But whatever that decision is, you've automatically set yourself up for failure. Automatically. Right when you click that sell button. Why is that? Because you have two chances. You have two things that both lead to bad outcomes. You exit the position, it dumps, and you end up upset because you missed the move and you didn't trust yourself, when in reality you shouldn't even been in the trade. Second option, it goes against you. You would have gotten stopped out, but you took it off because you were scared. And you end up happy because you're like, oh, I knew that was going to happen. And then you start feeding a fucking lie to yourself. Oh, I knew that was going to happen. I'm so good. I knew that was going to happen. That was a great way to take off my position there. That was a great decision by me. No, it fucking was not. You're goddamn living in a fairy tale. You set yourself up for failure without realizing it. Because the habits you build by doing that go against everything that you need to be a successful trader. It is the difference between being focused on making money versus focusing on good habits. You will make money by being... Dude, the amount of hate in people that I get that I'll post on Twitter about saying don't be focused on making money, they're like, the whole point of trading is to make money. If that is your response, then you don't understand what I'm saying. You don't understand what I'm saying. And you haven't gotten to that point in your trading in which you realize it. You haven't. Because when you are focused on making money, that is when you build bad habits. That is when you become emotional. That is when you start making emotional decisions. And everything goes down the fucking hill. When you go into the market focusing on, okay, recognizing where we are, should I enter here? All right, this setup looks good. I'm going to enter with good size based off of recognizing the model. How confident am I in with this? If I'm not confident in this, I'm going to watch it and then journal it. Because then I can build conviction with it, and I will be able to catch these moves in the future. But if I don't have the conviction now, why should I be taking money and putting on capital with something I don't have fucking confidence in? That is the fucking definition of gambling. And then they say they're not gambling. I'm not gambling. Brother, you had no confidence in what you're doing. That is fucking gambling. You have no edge in the market. You might think you do, but you don't. I don't care if you took this same fucking trade. I don't care. If you took this same fucking trade, but all you did was look at me, say, sell, you sold, and then bought when I told you to buy, it's a terrible fucking trade. Doesn't matter if we took the same setup. For you, it's a terrible trade. For me, it's a great trade. Why is that? It's the same fucking trade. Justin, how the fuck can it be good for you but bad for me? It's the same fucking trade. Because I had confidence. You didn't. You had no fucking clue what you were doing. You gambled. I did not. If you want to be a good trader, you have to be self-sufficient. And you have to have your own personal conviction. If you do not ever get to a point in your trading where you have personal conviction or personal confidence, you will always have emotion. You will always make bad decisions because you never have confidence in what you're doing. And you'll never become consistent because you're constantly looking for new things. You're focused on opportunity. You're not focusing on building good habits. And that's the difference between us, this community, versus almost every other fucking community out there. I don't give a fuck if you made money today. I don't fucking care. Did you have confidence with it? Did you follow your rules? And did you not just take it because I said so? If that's the case, great fucking trade. If that's not the case, that money is not yours. The market will fucking take it back so quickly. So quickly. And guess what is going to happen after that? Is you end up taking an alert from me. Oh my God, Justin's such a good trader. Let me just fucking take every sort of alert he trades. You might make money from my trades, but you will ultimately lose money. Justin, how is that possible? Because you don't know how to manage a position because you have no idea why you're in that fucking position to begin with. My goal is to make you guys understand. Not only understand, but have confidence in your own understanding. Because if you don't have confidence in your own understanding, how can you ever truly believe you're a good trader? I could say that I believe in God, but if I don't fucking feel it and know in my heart that God is real, I could not call myself a believer. You have to know with certainty what you're doing is right and the things that you don't do right are wrong. Don't care to catch every single move in the market. I don't give a fuck what the market's doing if I can't recognize where the market wants to go. I don't care about touching the market unless I give a good understanding of what market wants to do and I get the exact model in which I'm looking for. And you shouldn't either. This is what gets in the way of people's consistency and people's growth. Is they go on Twitter, they see somebody else win, and they're like, oh my God, this guy won. I lost today. I must be doing something wrong. Let me go switch over to their strategy. Let me go see what this guy sees. And then the same process happens again. You try learning something new. You fail. You see the same thing. Oh, this guy did it. Oh, let me go do this. Resetting the curve, back to square one. Instead of putting in the time, working through the faults, and fixing them. That is why journaling is so important. And that is why I constantly say, you will excel as a trader if you are focused on building good habits and not making money. You will outperform people that have been in this space for years that still have no fucking clue what they're doing because they care more about a social media presence and proving people that they're profitable instead of actually being fucking profitable. Do not fall into that trap. Do not. So, any questions? Can you go back to over areas where you are expecting to see manipulation? Yes. Great question. I expect to see manipulation in areas in which I expect to see a reversal. Why do I expect to see a reversal here? Because we're back in OTE. There's a reason for us to go lower. I don't just expect to reverse here. I expect us to reverse this entire move. Why is that? Because we're in a bigger time frame sell model. And I have confidence with it. Where do I expect to see manipulation? Bigger time frame imbalances, in equilibrium, in relationship to whatever that model is. I expect to see manipulation in points in time in which I already expect to see the market move in the opposite direction. Does that make sense? Do I expect to see, if I'm looking at something like this, if this is my bigger time frame model, do I expect to see manipulation right where we are right now? No. Why is that? Because there's no reason for us to have manipulation here. You're guessing. We can go straight to this high. You have no idea. Where do I expect to see manipulation? Let's say price then pulls back here. I already expect price to bounce here. This is when I look for manipulation, and I time the market. I time the market. Because I already expect, in the bigger time frame model, this is a point in time I already expect to bounce. So this is when I zoom in. Again, fractal markets, I'm expecting the exact same thing, the exact same model. Manipulation, displacement, boom. This is now my form of manipulation in an area in which I already expect to bounce. Not here, not here, not here, here. Does that make sense? How do you know where the start of the market maker model is? For example, on the larger time frame market maker sell model today, I didn't know where the final price target would be to consider the model complete. Recognize, great question. Multiple things to look for. Number one, zoom out. Is there a bigger time frame imbalance that we might want to rebalance to? On the weekly, there's nothing. On the daily, we have a volume imbalance. Let's zoom in even more. Is there something else here maybe? Next thing I'm looking for. Equal lows. Relative equal lows or equal lows. This is what I'm looking for. One also thing I want you to pay attention to is high quality sell side or buy side will always align in an already existing place in which we expect to bounce. Why do we expect to bounce here? Not only because we've taken sell side, but because we're also back in OTE, back in this imbalance. We already expect to go here, right? So now it's zooming in and finding the model and recognizing how we're going to get here. Why do we not expect to go lower now? Can we go lower? Maybe. But this is a complete model. Why is this the end of it? Because to the left of us, there's nothing here. This is a big imbalance. We are now back in OTE of the range. Now, what could maybe possibly happen? Like I said in the previous session, we could spark the bigger time frame sell model, which then will bring us back to equilibrium of this range, which this massive fucking range that we've been pumping for the last couple months. What do I need to see for that to happen? This is now the low that I'm looking for. If we displace through this low, I now know we most likely want to go to equilibrium. Sorry if this is not about the trade, but how would you think this is a valid SD on the 5-minute and NQ? That's after market close today. I think that's fine. I think that's valid. Once I journal my trades, how often should I go back and review them? Right now, I review my previous week's trades on Sundays, but want your thoughts. Good question. As much as you need to. The point of journaling is just doing it. The action of taking the time to review it, write it down, reflect on it. That is what is important. I don't care how much you go back and look at it. Just the action of doing it is massive. Just like these charting sessions. These charting sessions are my journal. The action of me being able to come to you guys and explain everything I did, right or wrong. Again, I'll never fucking lie to you. You will always get 100% reality. If I did something wrong, I will tell you. If I did something right, I will tell you. Because to grow as a trader, you need to take accountability. There is no ego bullshit. There is no swiping shit under the fucking rug that you don't want to admit. It is you take full accountability of every mistake you fucking make. Yes, I am in the process of building a journaling software, and we will be releasing beta in March. Today, I don't take the trade because I was waiting for an SMT, when in reality, there was the SMT fair value gap. But because I never used them, I wasn't confident to take the trade. Now I am completely fine without taking the trade because I respect my strategy. Now I implement in the strategy the opportunity that the SMT fair value gap is still valid. Appreciate a lot of your speeches. This speeches changes lives. Thanks. Much love, Mattia. Again, glad to help. Glad you understand the reasoning behind it. Again, doesn't look too bad, Michael. I think it's fine. I still think that's fine, Steph. Again, you just traded the second stage. A key that helps me when I review my journal is I emphasize on looking on my winning trades more than my losers to have that printed in my head. And I always like to do it a Sunday night before the market opens. Love it. Love it. So with today completing the market maker sell model, do you think we could see structure to have a market maker buy model back up into the 4-hour for value gap equilibrium of this week range so far to continue to lower time frame? We'll talk a little. Let me answer some more questions, and then we'll talk about what we're looking at going into the rest of the week and what we can expect to see. Every time I add contracts, I feel like it messes up my RR. I used to add contracts to winning trades, but if price reverses to my entry and I exit, I end up with a greater loss. Can you explain how you add without damaging your risk? I hate adding, though. I just won't do it as of now as I grow. Yeah, again, you don't need to. But the whole point of adding is not about minimizing risk. It is about maximizing your win. There is a difference. When you add to a position, well, of course, again, when you add to a position, you can't expect your risk to decrease. Your risk is increasing or staying the same depending on how you manage it. But you are focusing on maximizing your win when you scale. For example, let's say we have something like this. This is what I'm looking at in the chart. What's an opportunity for me to scale here? Let's say I zoom into the internal model. I recognize what we want to do. First entry here. I enter long. Stop at this recent low. Price targets the high. My risk to reward here. Let's say I enter 5 contracts. Fuck, I can't. God damn it. Hold on. Let me pull this over to the other screen so I can log in real quick so I can actually do this for you guys. Wait, let me make sure this is not there. Yeah, okay, we're good. Where is it? There it is. Okay. Tradeovate. Concurrent connection warning. Wait, do I have it open on another tab? Oh, I do. Let me close this out real quick. There we go. Okay. Trade ovate, bank, bank. Okay. All right. Pull this back over. Okay. So, let's say 5 contracts. My stop loss here. Again, just for the sake of this, 5 contracts. 4,500 is my stop loss here. My price target is I'm making around 20K. 4.3 risk here. Fantastic alone. Fantastic alone. How would I potentially scale? Let's say I'm looking at this on a 30-minute or a 5-minute or whatever. I zoom into a 1-minute, and I then look for my second entry here. I'm looking for, again, recognizing whatever this model is. I find whatever this internal model is. Wait for the displacement. We pull back. I enter in. This is now a point in time in which I can scale more. What does my stop get moved to? The recent low. What is my fill now? Half of this. I add half here. Okay, keep in mind. Keep in mind. Original entry here with this stop loss. 5 contracts. My max loss is 4,500. I now wait for the extra confirmation. I add another 5 contracts. My fill now gets half of this, so I move this to half of that. And my stop is moved to this low. 10 contracts now. What is my risk? The exact same. What is my stop loss, or what is my price, my PT? 34K. I am now risking the exact same with the potential to now make almost double my entry. This is how you take advantage of scaling. But the hardest part is recognizing when and when not to do this. Because there's many times where I will not scale into a position because the price action isn't efficient enough to do so. Because there's a possibility, again, if I know we're going to get bad action, we could do this. And then do it, right? Whatever, right? That's a possibility. You have to recognize conditions first to know, is scaling even a possibility? Why is it a possibility today? Because we're in a bigger time frame market maker style model. I expect to see efficient action to the downside. Does that make sense? So again, scaling is not about lowering your risk. It is about maximizing your win. Took this trade on ES and I had shared it with you, said it was too early. You had said that we didn't displace below a low yet. On this time frame, I think we did. How can you recognize when we displace and not depending on the time frame? Also realized it was too zoomed in, and there any other reasons that you think this didn't play out? Because the 2022 model is ass, and you have to be able to recognize manipulation first. We still have equal lows here, or equal highs. There's no form of manipulation. This is to fake you out. This is to fake you out. This is not ready. As well as there was no displacement through this low. This is not enough displacement. Not enough displacement. You're too zoomed in here. You're too zoomed in. And also, where we were on ES at this time, or NQ, we were pumping to OTE. How do you discard the possibility of creating the power of 3 model when sell side was swept for then targeting the generated buy side, creating a possible SMT for then dump 11:50 a.m.? How do you discard the possibility? Because this move here. Displacement. Once this displacement move, there's power of 3s off the board. Power of 3's off the fucking board here. Again, for a power of 3 to happen, these lows have to stay intact. Again, right, if this is power of 3, we chop here, then have manipulation, then displace. Once displacement happens, I recognize this is manipulation because we have this SMT. And we have the breaker. There's no reason for us to go back higher. Way too zoomed in, Zach. Way too zoomed in. When you talk about action like that, does a higher time frame look efficient / not choppy or indecisive? Confirm when action is in your favor, or what do you use to identify when action is on your side? When I expect on the bigger time frame to have okay, let me try to phrase this. When we are at a point in again, think about it this way. Markets are fractal. When a market is fractal, that means when I have information on one time frame, I get information on every time frame. And I can use that information to structure a bias on when I expect the market to move. Not chop, but have efficient, displaced move through to some sort of liquidity level, wherever the draw on liquidity is. So if I have a model, again, going back to what I'm looking at before, right? Let's say this, again, same thing. If I am looking at a 1 hour here, and we are here, again, we are at a point in time in which I already expect to see a rejection. So this is where I'm looking for manipulation. How can I expect, what gives me the confidence that we are going to get efficient action? Because the market knows where it wants to go on the bigger time frame. Once I align the lower time frame model, that is when you will get efficient action. Because we already expect to dump here. Why are we dumping? Efficiently. Because we have all this sell side here. The market the model is clean. We can recognize it. When we're here, I know this is going to be efficient. And if it's not, I wait for it to be so. And you'll notice we'll chop. We'll again, when market's here, do we expect to see manipulation here? No. Can there be? Yes. Am I trading it? No. We can chop. We can form more structure. Generating sell side, right? All of this generated sell side on the lower time frame. Before having manipulation, waiting for the displacement, recognizing the internal model, that is when we will get a fast move after all of this is done. Looking at today. Chop, 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 chop. Why are we chopping here? 300-point move in the overnight session. Where do we need to go for us to continue lower? We need to rebalance price. We rebalance price. Dumps. Why are we dumping? Because we already expect to dump there on the bigger time frame because we're in a market maker style model and we know we're going to these lows. I wish I could put Justin's brain in my head. It's all experience. There's nothing special about me. It's just thousands of hours put into the market, seeing it happen over and over and over again. How did Tom Brady become the best fucking quarterback? He threw thousands and thousands of fucking balls. He ran thousands and thousands of fucking plays. You don't just become good at something without doing it. All right. Let's talk about my bias going into tomorrow. The objective of what I wanted to see this week has been taken. These lows have now been taken. Standard deviation projection has been met. Once the standard deviation projection has been met, what do we expect? What do we expect? More specifically, boom, owl hit it. Back to discount. When the standard deviation projection has been met and we respect it, meaning we tap it and we respect it, displace, we will go back to equilibrium of the recent price leg from whatever the manipulation leg was. This is the manipulation. This is the price leg we are looking at. I expect to now go back to equilibrium of this range. What also aligns with equilibrium here? This 4-hour fair value gap. Why is that important? Because this adds conviction to that bias. Why does this add conviction to this bias? Well, Justin, why does a fair value gap being here add conviction to the bias? Because what are the 4 reasons why markets move? Hunt liquidity, rebalance to equilibrium, and rebalance to inefficiencies. We are rebalancing to equilibrium while also rebalancing the inefficiency after sell side has now been taken. So going into tomorrow, depending on what happens in the overnight session, whatever happens, well, again, we'll figure out what when we wake up tomorrow. But I'm going to be most likely bullish going into tomorrow until we get back to equilibrium. Now, once this is taken, I most likely expect more structure. Possibly something like this. Right? Patience. Wait for it to be dumb clear. Take a look at news. We have no news tomorrow. Today's Tuesday, right? Yeah. We have no news tomorrow. So considering today's move lower, leaving highs untouched, we could see 15-minute, 5-minute market maker buy model. So our job is to identify the lower time frame manipulation after rebalancing to target equilibrium. No, we are recognizing the manipulation to target equilibrium. Once we reach equilibrium, we can fucking do jack shit. We can just chop here. We now need to recognize what the model is. Because now this model has been complete. We've now rebalanced equilibrium. From there, we're back at square one. We need a lot more structure. But we have a bias, and now we want price and structure to confirm that bias. Why weren't you profitable after 2 years of trading? What would you say is the thing that made you profitable and consistent? There's multiple different things. Number one, I was trading terrible concepts that did not fucking work because I was in a shitty Discord that taught me bad fucking habits. I was trading options, which are fucking terrible to learn, especially when you're learning, because it's very, very, very hard to manage risk when you're constantly being told to trade 0 DTEs. And I had no conviction with what I was doing. I had no good risk management, and I was focused on making money, and I wasn't focused on building good habits. All right, guys. That is all I have for you guys tonight. Hopefully you enjoyed tonight's session. A lot of gems dropped, as always, for you guys. Great day. Let's keep it going. I'm excited to see everyone continue to grow. Let's see what happens tomorrow. Let's see what opportunity the market brings us. And I will see you guys tomorrow morning. Enjoy the rest of your night, guys. I'll see you then.